however, a few weeks away for me, away from home, and for Dennis as well, probably. Yeah, Vienna, then Munich, then we disturb you in Ljubljana. So it has been few weeks. Much have happened through those few weeks, and on this block chat with Denis Petrovcic and Makram Hani, we'll run you all through it. There's many or few partnerships that are very meaningful that we want to announce. There are much happening, or there is much happening in the background that we will talk about as well. I'll give it on to Dennis now to talk to you about a very specific, interesting partnership that we have started. Um, Post these partnerships that we've announced, and there's few that are coming. Dennis, how are you? And what's the first partnership we want to talk about today?
I'm good. I'm good. I'm great actually. A bit exhausted, like you said. We've been around past 3 weeks quite a lot, and um, it's great to see things going back kind of to normal in terms of broadening someone's network and talking about tokenization of real estate in person with other people from within either the real estate industry or the blockchain industry. Um, yeah, like you mentioned, there's a couple of partnerships that we've been working on actually for some time. So it's not something that it just comes overnight and then we announce something. Obviously, we need to see if something is a good fit or not for us to use. And the partnership that we decided to kind of highlight today is the one with Flux and FluxLabs, basically. So um, for those who maybe don't know about Flux, it's a basically, like, just to shortly describe it, it's a decentralized AWS, which is a cloud computing service. Um, and um, and this is amazing because this is a part of when you're building a decentralized solution. Um, a part of this is also relying on centralized solutions that are provided usually by providers such as Google and Amazon. And here we're able to start discovering an alternative method of achieving the same, but with decentralized infrastructure. So I think this is kind of a very, very important, I would say, important piece of infrastructure. And this partnerships basically allows us to start discovering how it all fits and it fits and how to scale across Flux. So I'm really, really excited about this announcement, actually.
So, okay, there's few things that we have done. There's few things that we are doing now, and I would like that we draw a picture where all falls into perspective. At the end of the day, what matters is executables. Yeah, what does it serve our purpose and the community's purpose on the ground? So let's start from the beginning. We've built infrastructure and frameworks to be able to tokenize real estate. We have built infrastructure that can be served as a SaaS model, as a white label solution for people to be able to launch marketplaces, tokenize real estate. We also have within our infrastructure capabilities of um, secondary market trading whenever required, and hopefully will be properly legislated for coming up. This is the first phase of what we've done. Second, we started and we've built on Ethereum. Why? Because with real estate, what we needed is stability and is security. And this is a very major and important portion of what we do and what everyone who's trading or buying or holding real estate expects. Afterwards, we started going out to the world, we informing the world about what we do, tokenizing real estate, where we tokenized approximately $50 million of real estate over the past few months. And most of this real estate is staked already. So there's value locked on chain today within that ecosystem. And now we started with developing on Near through a partnership that started a few months ago, which more will be talked um, about that partnership within the coming few days, especially with few announcements coming up within a special session that we're doing with Near. But also, we've had um, expansions, and we have many talks with parties that we're expanding beyond the normal and the traditional. So we had a partnership with a dating app, Dua, yeah, which adds value and gives a different perspective to what we're doing, and at the end of the day allows us also the right kind of access and allows them to connect to real estate, the future of real estate, how it will become traded, sold, purchased, and held actually. And today we're partnering with Flux, which is an infrastructure provider. So, can you tell me, please, and tell everyone, how would this fit within our general approach, within what we're doing, and how would it get us a step further and nearer to where do we want to go? Because this is what matters most. Where are we going?
So imagine that you like every application, every website that you build is usually hosted somewhere, right? Right. Today, this means that the servers where that is hosted are mainly you on AWS or Google Cloud, and that's in a way a very centralized solution where Google or Amazon can essentially could shut your account down, right? Which means that then a website, even the simplest website, would not be displaying anymore, basically, right? For this to happen, I mean, you might be doing something wrong. For instance, I was just watching a Netflix show and it was mentioning something that's kind of in our generation, and probably a site that many people know about, which is the Pirate Bay. It's where you would download pirate versions of movies, TV shows, and that was before Netflix and everything, right? And it was a way for getting content quite fast, and obviously it kind of made a lot of people angry, so they were looking to tear it down. Now, how that site was hosted was obviously not through Google Cloud, but they had their own servers, right? So the police had to barge into their basement and basically tear down the servers. But they went back up afterwards because they had mirrors, sites served through other infrastructure. But essentially, when somebody doesn't want, or there's incentive for something to be stopped, a service, it can be done when it's done through a centralized solution. And here the you're always looking at the weakest link in the chain, in a way. And here it means that we have, for instance, a front end through which users can interact. And if that front end is not served anymore and not accessible anymore, then the whole service is disrupted. And with Flux, you basically are able to kind of mitigate that risk. So how this partnership is going to manifest is basically we're going to start putting more and more of our services onto Flux, starting with our website first as the simplest basically way of doing this, and then slowly migrating other parts as well, or maybe just having in parallel a way of using Flux and the standard, I would say, the industry standard way of deploying applications.
And now, this is very important for people to understand. Most of our applications are serverless. Yeah, so the front ends, yes, are on servers. However, everything else is on chain, so is serverless. Yeah, so there's no major change to how we do things from that may affect the security of how we do things, that may affect our smart contracts and frameworks and an end. Am I right, Dennis?
Well, yes and no. So you are right, of course. However, sometimes you always need to have also something that is I would say centralized, and it doesn't rely just on the smart contracts that are on chain. So when you build up a Web3 application, I would say most of the times what you want to have is, you know, some smart contracts that would kind of replace your backend, and then you would have your front end basically that just uses that data. However, when you do dealing with tokenized real estate, you still have to have certain information which is related to KYC of users stored in a kind of secure, safe, not public, essentially, most of all, not public way, right? Why? Because you need to have the ability to identify accounts that are holding tokens if
Sure.
required. That might be for tax purposes, or well, mainly for tax purposes, but as well because there's real life accounting that needs to be done, and yeah. And so provenance of funds is also important, especially when you are a property owner and you want to finance a real estate asset. The other financing party will probably ask, like a bank will ask where the funds come from. Now, um, here with Flux, we're basically not saying that we're going to put everything that we have on. Right now we're using Amazon Web Services, and we're not run all that piece of infrastructure on Flux yet. But eventually we want to go in that direction. And this partnership is basically just us showing where we want to take Blocksquare, in which direction, which is ultimately a fully decentralized infrastructure governed by BST holders.
So it's the DAO that is being empowered over here. Yeah, it's the DAO element, it's the community element that's being empowered. That's a great step forward, in my opinion. And every step we're taking should meet other steps within the route towards what we would call success. And we're asked every day, how easy is it to get things running with your technology? How easy is it to get to a country and start tokenizing property? And the answer, unfortunately and fortunately, is it's so easy and not easy at all. Because technically, it's so easy. Yet, there are challenges that everyone should be aware of. And those are available in every startup, but most necessarily and specifically in every startup that's pioneering, that is in a space that is being started now and being developed now. So, Dennis, what we want to cover today, I promised a few members of actually, they're members of Fibreeze. I wanted to say members of our family. So they're not members of our family at Blocksquare, but hopefully they will become very soon. And they're interested to run marketplaces. And I will mention from them specifically Mehmet, yeah, who is interested to run a marketplace, asked a few questions, and I promised him that we will answer those on the block chat. That's last week. So how about answering some of those today?
Yeah,
Let me
let's do
start
that.
by let me start by asking you the question that we're asked every time, and I refer people usually to the earlier chats that we've done. Hopefully, our chat is maturing by the day, so I would like that we answer it again, so that we can refer them to this chat and answer all of those questions at once. So, why would anyone launch a marketplace today?
Okay. Well, I believe launching a marketplace today is one of the biggest opportunities in real estate, because essentially you're launching a new brand that people will associate with access to real estate investments. Because I believe in the next 10 years, there's not really going to be any other way of doing real estate investments, I would say, on a certain ticket size than tokenized real estate. And if you don't get on board today, well, probably there's going to be somebody else who's going to take that position in your country, and another brand is going to be associated with that.
Okay. So the question then comes, why would we tokenize real estate? So that's great. You launch a marketplace. That's the future because you want to sell and trade tokenized real estate. So why would we tokenize real estate in the first place?
Um, yeah, so the tokenization of real estate, I think, is like the atomic way of somebody owning a piece of property. It's like the most ideal um, tool, or the ideal means of basically holding on to economic value that derives from real estate assets. Not just because it's very, very easy to access. So buying a token today is like, it's super easy, right? Whether that's a real estate related token or something else, it's so easy, right, to do it. If you have 15 minutes, you can own something today. You just need an internet connection. Now, the second part is reselling it. It's so easy as well. So now we're adding this quality that people in crypto are kind of liking so much, and that's what makes it addicted. It makes you addicted to owning things through that, through that method. That it's just gonna create a new asset class on the real estate side, and this is something that you've been talking about as well for some time. And you maybe have a different view, Makram, than I do on the why owning real estate through a token will be basically the only way how people want to own real estate.
I don't have a different perspective, but yes, I have a more aggressive perspective probably. However, as you notice, I've decided to talk less. So I'm on that silence mode most of the time those days, which is proving fun for me because I'm learning much more stuff. We've tokenized the first French property, by the way, yeah, a few days ago, and it took you. And what reminded me of that is you just mentioned that. It takes you 15 minutes to tokenize a property. And actually, you've tokenized that property while with the gentleman who owns that property on a call, isn't it?
Um,
Or afterwards?
No, no, I was not on the call with that gentleman tokenizing it, and but and also the action of tokenizing real estate itself is, yes, very, very quick. What I did, however, is what we did is we went through the process with Daniel, actually. So Daniel
Okay.
we were having an onboarding call for real estate assets, and we did one property tokenization in that call, because we usually don't do it, right? And it's something that then takes actually, yeah, 15 minutes to finalize. It's not a big deal. The only thing is doing the due diligence process before, so that what is being tokenized is verified as much as possible, right? Because we're doing this for the purpose of staking. Certain things are much easier because the economic right doesn't change hand with a third party. So that's makes things easier at the stage of onboarding assets,
Mhm.
but the process is all the same in the end.
So, how secure is it for someone to purchase a property token?
I would say it's just as secure as buying. Let's define security first, right? Um, So for me, security in this technical term is basically acquiring something and being able to hold on to that something, no matter what the value of it is, right? So I'm talking about just technical security. And the technical security is related to how I set up the wallet that I'm holding the property token in. So the most secure way of doing this is probably using a hardware wallet, because it just simplifies the private key storage. So if we're talking about technical security, if we're talking about investment security, is, I would say, more secure than investing in stocks, definitely more secure than investing in cryptos, definitely more secure than going in a casino and betting on a number, um, and which is not an investment, but they're just throwing it out there, because some people make investments just like if they would be going in casinos.
They do everything
Um,
like that. Exactly.
exactly. You just wing it. No. And if you compare it to real estate investment, it's more risky. Yes. Why? Because you need to rely on some other party who is actually managing it and owns the full bundle of rights that come from real estate ownership. So this is also the reason why I would invest in tokenized real estate within certain limits. I need to know who the operator is. I need to trust the operator first. Um, I need to know what the market is. I need to understand that market. And of course, I need to understand the underlying asset, where the business is, what's the vacancy possibility, what can affect that vacancy, and etc. Right?
So
And those are the criteria on the investment security or risk surrounding tokenized real estate.
to translate that in simple terms, it can be as secure as anything else or as risky as anything else based on how you approach it. Yeah. If you approach it with ignorance and you don't look at the details in it, who's the issuer, who is the property manager? Today, in every real estate transaction, property management is key. Yeah. I'm a real estate investor and I know how important is property management. Actually, most of the value we create, and value does not need all the time to translate to profit in capital appreciation. However, most of the time, if you're professional, you are able to have that value transmitted into capital appreciation. Most of the value we create is through prudent property management. And that's very important. So, what's the market? That's something you need to understand in any investment, and specifically in a real estate investment. Who's the operator? Because um, that is very important to your cash flow and to your productivity of that property. And cash flow and productivity of that property translate into some of your reward with that property. Three, who's the issuer? How secure he is? Um, how good quality is the issuer, if I could say that? How good standing? How good does the issuer stand? And last but not least, do I understand the dynamics of that specific property? So those are matters that do impact your investment in real estate in general and specifically tokenized real estate. So it's the underlying asset that is real estate, which takes all its characteristics from real estate because it is real estate. And then on top of it, it acquires some new characteristics that usually are not available in real estate, but are available in bonds, that are available in equities, that are available in other asset classes. So when I say tokenized real estate and beyond is an ultra asset class, it's a new asset class. I call it real estate 6.0. When I say that real estate is the ultra asset class, it's because it has all the pros of real estate, or it acquires most of them at least, and then it acquires much more pros from other asset classes. So if you go to equities, usually because it's liquid, tokenized real estate is liquid. If you go to bonds because it's transparent, tokenized real estate is transparent. If you go to dividend paying equities because it pays cash flow, tokenized real estate pays cash flow, and so on and so forth. I don't need to run through the whole thing. It's obvious that I'm always biased to real estate, and here, tokenized real estate. So I don't need to convince you that I'm biased. Everyone does know that. It's working for me. I hope it does work for you at the same level or even beyond. So that's us seeing, okay, cool, it's logical, it makes sense, Dennis, how secure is real estate. The question asked afterwards is, what are the risks? So can you tell me, please, some of the risks of tokenized real estate? But let's start by the risks from a credit risk, and then we take it forward to other portions of risk, and then
Yeah.
we go for opportunity probably beyond before after that.
Well, I think from a perspective of risk, um, well, as with any investment in real estate, if you do an investment yourself, let's say you buy your home, and when you buy the home, you put some equity, and you hopefully, or not hopefully, but perhaps most people that are home buyers are able to buy through with a mortgage, right? Um, and when you do that, you basically create risk because you might lose that home. You might lose that home if you're not able to service the loan. And that's something that's called default. Now, when that default happens, so that's a valid risk, right? When you're buying a home, you'll make everything so that that doesn't happen, right? You'll try to not go and purchase a home that you can't service. You will make sure that your financial future is kind of secure. But there's situations like an economic crisis, a downturn, and people get fired, lose jobs. Things happen, and then you might run into that risk might become true. So just like with this type, which is the most common and the one that most people know about, when you go into investment property, you usually have also leverage or use leverage, and that's also something that is then makes an investment more risky. So the higher the loan to value ratio, which is the ratio between the loan amount and the valuation of the property, um, the higher the higher the return usually, and the higher the risk, um, and the higher the amount that that property needs to service on a monthly basis for that loan. In some countries, it's possible to have an interest-only loan where you're basically just paying off the interest, and then the principal you are able maybe to pay out at the exit time. Most of the times, we are basically we encounter loans where the principal is being paid back throughout the time, and it doesn't change with tokenization. It's all of those things are still present. So when you're co-investing in real estate, which is tokenization, it's about co-investing in a way. You need to consider those two parts. You need to consider the equity portion versus the debt portion, the financial projections, and if it's feasible for those financial projections to go through, and assess on the other side the risk of vacancy that might impact cash flows on the property. And that's then becomes in a way I would say the main risks that tokenized real estate presents are not any different than me and Makram putting money together and buying a property.
So why would me and Dennis, who bought the property, go and tokenize it? Why would any owner of a property today go and tokenize it? And what's the opportunity lying forward within that approach? And let me add another question here to make it complete. Should anyone expect, if they have a building of $100 million, to pull out $100 million within few weeks in real estate? Or if yes, what does it depend on? Does it depend on them as an issuer? What is the most important factors or factors, if possible, within that approach?
Well, if we go from the last question, Makram, and I'd actually ask you to be involved in these questions, because it's things that both of us probably have something to say about. Maybe I look at this from more of a technical perspective, and on your end, maybe more from somebody with real estate investment experience that's much more than I have. But I think that in terms of what you can expect through the tokenization process, um, I think it kind of really depends on your reach. I would say that's like number one. You need to have a certain network of people who would really love to invest with you, but they couldn't before. So now with tokenization, they suddenly can do that. I think this is the main the main driver for you to be able to actually get others into your deal. And that takes you to the question: why is this person allowing me to access this investment? Most probably because they found another opportunity somewhere else, and they don't want to just sell the property because they love that property still. They see a lot of potential for growth for it, but they now release, or they have the ability to release just enough equity from that property, or for maybe 2 or 3 of them, to be able to pursue another opportunity that just popped up somewhere else.
Let me start probably with the why and how could you pull money out of the market today? Forget about tokenization for a second. Let's go conventional. Whoever you are, if you're launching a property, a project, or any other kind of investment, and you're trying to have people invest in you or in your project, in general, trust and the trust factor is major. If you're Goldman Sachs, it's different than if you're Makram Hani. Hopefully Makram Hani is much more credible to the market. I'm not sure, probably to my wife and son. However, the idea is who you are matters much, because the first part of approach you would do is to your network, is to your community, is to your investment network and investor network. You're offering them a better, easier way to join you on a project, be it ready property, cash flowing property, which I believe is the ideal to start with, rather than just funding projects that are to come. And then you go to the wider community, and then you go to everyone else in the world. So it all depends on who you are. So when we say, because I used to say that myself, and I'm guilty of not having the right view of it probably, I used to think, you know what? No one can pull today more than few hundreds of thousands of dollars from the market if he's tokenizing real estate, because we're just starting. But that's wrong. Stop here. Actually, if someone today comes into the market and they have the credibility, they can pull hundreds of millions of dollars from the market. Because if today an organization launches the ability, forget about tokenization as a technical term, launches the ability of hundreds of millions of people to join a real estate investment, be it in Frankfurt, in Luxembourg, in New York, in London, wherever it is in the world, in Dubai, and they told their clientele, let's say they are a big bank, and I would not mention a name here, and they would say, for $150, you're able to access that deal. Do you really believe that less than 50% of their customers would be interested? Now, maybe they would not subscribe to it, but they would be interested. And then probably in the tens of millions of people is the number of people who would jump in. And that's the same if Facebook offered it, or if LinkedIn offered it, or if Twitter offered it, or if any trusted Tesla came up and offered it. Amazon came up and offered it and said, invest a $500 in this real estate opportunity. So the market has potential to give, and the ability technically to pull that all together is there. So when we talk about tokenizing real estate, let's go back to basics and look at investments. What's most important in an investment? It's trust, credibility. What's most important in a real estate investment? It's trust, credibility, and the quality of the asset in hand. And that probably matters much whenever you're talking about trust and credibility. So the answer to the question that we are asked, which I used to answer wrongly for so long, and I don't know what was the eureka moment where I started answering right. How much can I pull of the real estate market today? And I thought about it and I said, you know what? I have a real estate investment firm. And the minute I announced it, I soft launched it, by the way. To date, I haven't I haven't hard launched it. I haven't properly launched it. I had hundreds of people come in to invest in it. So, and that's just the start of something soft launched. And again, I'm Makram, not HUSBC. So and I'm not saying I'm less credible. I'm just saying that less people know me and know how credible I am, probably. So if you are credible and if you are able to perform and you have the right asset and you have the vehicle, the tool, which is tokenization, you are able to pull money in. So the opportunity is as good as ever. Do you feel the same way, Dennis?
I think I feel the same way. That's why we are going to have also token sales on Ocean Point.
Exactly. And here is the coming announcement. So Mr. Dennis now is telling you something which
I'm
is not
not I'm
small.
not announcing officially. I'm soft launching it, you know. I'm soft launching it.
So guys,
But
we're
yeah,
soft launching here. Remember, it's not an official announcement. Next time we talk property tokenization, we'll talk about sales in big numbers. We'll talk about sales of property that's performing and about something that does make sense to investors and to people to come in. Sometimes, because of how conservative we are, we approach things with, can I say, shy? We approach things with a conservative manner. So you don't go and say, this is it, go ahead with it. You say, you know what, this is probably it. It may make much sense. And this is you trying to be decent or as decent as possible. But when you really look at it and you say, you know what, I'm ready to put my time and my money behind this, and this is what I'm doing, why not you? So you go full thrust onto it. And this is what I am doing today. Next time I talk property tokenization, I would tell you exactly what I'm telling you now. If you're credible enough, you can pull hundreds of millions of dollars from the market to great investments from great investors. If you're not, you should not be pulling a dollar. Actually, nobody should invest in you, and you should die as an investor and as somebody who's trying to pull investment in tomorrow morning. So
but
that's the
another thing is also timing, right? Because time, or yes. Why? Because blockchain is beautiful. It's so beautiful that, you know, the time you spend doing something is publicly recorded. Think about it. Blocks the BST token has not been launched yesterday. It has been created in 2018, and the contract says so. It has all the information from that time. You can go and check it out yourself. So this creates provenance, or let's say time stamping during working on something, right?
track record.
Um, a track record, exactly. And imagine yourself 10 years from now not having any track record on tokenized real estate, and you're in the real estate business. Can you imagine yourself being 10 years from now and having no track record as a real estate company? Would you risk that? Or as a real estate investor? I think you need to start building that track record. It's just like, you know, opening up a Facebook page where when Facebook was there, or, you know, opening up an Instagram account and start posting there. If you start today, nobody's going to care. There's so many other accounts that are so much valuable for the user group that you are trying to target. Now imagine you starting tokenization 10 years from now. You're going to be nobody in that world,
It's
even though
similar
you
to
might be a great company in the traditional business sense.
it's similar to you having a land. It has no trees. When is the best time to start planting? Today or 20 years from now? To me, it's today. To Dennis, it's today. I hope that it's today for you as well. I believe we've said enough on this block chat. We've ran you through the basics because we want every single person to, including us, to be reminded of the basics. What's coming is something interesting at different levels. Dennis, do you have any other word to our community and beyond?
No, I'll just say thank you for watching us today. I think you saw that we were more conservative in our approach of bringing content, but that's because we're working so much. And honestly, it's been an amazing couple of weeks. But we need to you know manage our energy, I would say, and put our energy in all the fronts that matter. And well, hopefully you enjoyed the show.
Our
And
eyes, yeah,
yeah,
yeah, go ahead, please. Sorry.
and yeah, and see you next time, I would say.
Our eyes are on the money. As Dennis said, we don't have time to chat this week. It's a new era for us. It's a new era that we've started. And a few weeks ago, within our, can I call it the Blocksquare Summit, where we started looking at the future. And there's few initiatives that you will hear about very soon. And those initiatives are being built as we speak now. Again, to eliminate that we can't chat, so we barely talk to each other those days. Um, Today is the time for everyone to execute. We will be executing as we have been, but much more. Our eyes are on the money. Your eyes should be too. Thank you for joining us on the Block Chat for today. Denis Petrovcic and Makram Hani, have a good